Very good evening to all of you. On behalf of Auditing and Assurance Standards Board of Institute of Chartered Accountants of India, I welcome you all in today's 158th CP program organized by AASB of ICI for this council year. As we all are aware that we have covered various sectors, today we are going to cover a very important sector, that is the transportation and logistics sector. And in order to take up this very important sector, we are having with us very eminent and very learned speakers here, Raisuddin Safi sir. So on behalf of AASB of ICI, I extend my warm welcome to you, Raisuddin sir, on this AASB platform. Welcome to you, sir. Namaste.
Thank you, Anil ji.
We are also having with us CA Saurabh Gupta ji as a moderator for today's webinar. So on behalf of AASB of ICI, I also extend warm welcome to Saurabh Gupta ji as a moderator for today's webinar. I also welcome all the participants of today's webinar. So without wasting much more time, I request Saurabh Gupta ji to please start the proceedings of today's webinar. Over to you, Saurabh ji, please.
Thank you, sir. Thank you for introducing us. Hello, everyone, and thanks for joining in, and a warm welcome to all of you. First of all, I would like to thank Auditing and Assurance Standard Board for conducting these webinars and for giving me an opportunity to moderate this session on key considerations in audit of transportation and logistics sectors. Considering the recent amendments in financial reporting frameworks and increased oversights from the regulators, it is important for each one of us to possess a thorough understanding of the relevant standards and disclosure requirements. So we are pleased to organize this webinar for the assistance of our fellow colleagues. Let us now introduce you to all to our guest speaker today, CAS Rahisuddin Safi Sarji. He's an accomplished professional serving as an executive partner in ASA and Associates. He's a chartered accountant by profession and also holds a bachelor's degree in commerce from Delhi University. He's also a member of Income Tax Appellate Tribunal. He has more than 14 of experience in auditing and financial services. He specializes in carrying audits under different GAAPs, including IGAAP, US GAAP, IFRS, and all. He has extensive experience spans across various sectors, which includes aviation, oil, gas, fertilizers, FMCG, power, automobile, banking, IT, logistics, and education. Furthermore, he actively contributes to professional discourse as a speaker on accounting and auditing matters at esteemed forums, including the Auditing and Assurance Standard Board of ICI, study circles, and ICI branches, and has assisted us in various publications of the Institute of Chartered Accountants of India. So now I would like all the participants, if they have any question, they can ask the question in the chat box. And I now request the sir to please start the session and please share insights. Thank you, sir.
Okay. Thank you, Saurabh ji, for the brief introduction. Thank you, Anil ji, for inviting me and giving me this opportunity. Special thanks to AASB for conducting webinars on critical topics. And and today's topic is in itself, it's a very wider and very complex also. But yes, I'll try to give justice to the time given to me. I mean, I'll put 1 hour 45 minutes in a way like we'll understand and we'll get the understanding about the nitty-gritties about this sector and how we'll do the audit, right, at various stages of audit, like planning, execution, and completion. So without taking much time, I'll start with my presentation. Just give me a second, please. Yeah. Okay. So is it visible, Anil?
Yes, sir.
Yes.
Okay. So good afternoon, friends. Thanks for connecting today on ICI webinar. So once one of the scholars said, like Henry Ford said, anyone who is stop learning is old, and anyone who is learning is young, either at 80 or 20. So those who are connected today, so we all are young. So let's start with understanding, I mean, what's all about in today's topic. So, as the name suggests, today we are going to discuss key considerations or the focus areas in audit of transportation and logistics sector. So this PPT is divided broadly in 4 parts. One is introduction. Basically, we will deep dive in basics before we jump into the audit procedures part. Then we'll understand each and every aspect of planning, execution, and completion level considerations during the course of an audit. So we will understand audit of a company as per Indian Companies Act, though the procedures for other type of entities like the non-corporate entities more or less are same, but we'll discuss broadly from companies' point of view. So transportation and logistics. Though the topic is transportation and logistics sector, so now the question comes, what is transportation and what is logistics? So transportation refers to the movement of goods, people and animals from one place to another. So this can be via roads, railways, airways, waterways, or even pipelines. So basically pipelines for the transfer of water, gas, and chemicals, etc. Logistics. So logistic is a wider term. So transportation is basically one of the activity of logistics. So logistics, as I'll read it to you, logistics on the other hand is the detailed coordination and management of these transportation processes, ensuring that goods are picked up. Basically, the logistic company picked the goods from the warehouse of their customer, stored, they have the warehouse facilities with them, and delivered efficiently and effectively. So basically, they provide end-to-end solutions in the logistics. So the transportation is one of the activity. So transportation is just one part of logistics. Logistics include a range of activities beyond transportation, such as storage, packaging, and inventory controls. We'll discuss in detail in the subsequent slides about these kind of processes. Transportation focuses on physical act of moving goods, whereas logistic focuses on efficient and effective management of entire supply chain, including transportation. So here we understood what is the difference between transportation and logistics. So entire presentation is driven from logistics, which includes transportation also. Okay. Okay. As before we go into audit procedures part, we need to understand the basics. So we first need to understand how this industry is growing in India and what's the impact on Indian economy. So I must tell you, logistic is the sector which is the backbone of any economy, especially the Indian economy, right? And because of that, the government of India implemented many policies. Like recently in September 2022, the government of India implemented national logistics policy to reduce the logistic cost from 13 to 14% of GDP to 8%. Then PM Gati Shakti National Master Plan was also designed to develop multimodal connectivity infrastructure. And as you can see, there's a rapid growth of e-commerce in India as a significant driver for the logistics sector. And e-commerce is expected to grow at a compounded annual growth rate, CAGR, of 27% to reach 163 USD billion by 2026. I mean, so the e-commerce market is growing. So this is ultimately having the impact on logistics sector because logistics sector is basically supporting to the business who is running the e-commerce. So COVID-19 was the era when everything was shut down and there was big issue from respective country side. Every country is having their own set of regulations, especially I mean the Europe part, the Germany side, Italy side, and I mean India also impacted. But one good thing was everyone was using the technology because people was like house arrest, so kind of house arrest feeling, so they were using the technology, they were using the internet, and because of that they started doing the online shopping, right? And now, I mean, based on our survey, it's expected that this logistics sector will grow at 12% CAGR and expected to add 10 million job by 2027 in India. And there are rise of third party logistic partner, fourth party logistic partner due to increase in demand of complexity of supply chains and need for specialized logistic services. So specialized logistic services like the cold chain, hazardous goods supply, or the specialized goods supply, right? These, and in 2023, World Bank Logistic Performance Index ranked India at 38 because of infrastructure quality, friends. Now, because of many initiatives, this gonna improve, and there is a lots of scope in India as far as logistics sector companies are concerned. Advanced technology like AI, IoT, and blockchain in all major logistic operations are the key. So they are using technology, you know, to automate their processes, to save the cost, to save the time, to track, monitor, trace the shipments which they are delivering on behalf of their customer. So this is the stat. So transportation industry is running at 20 to 22 trillion in India. So major portion goes to transportation and warehouse 3.5, and other value-added services 1.7 trillion. So let's understand what logistic partners do. So those, those who are working on these clients, they can completely understand that these services which we are going to discuss, one of the entities might be doing the one services in their company, and one company might be doing the multiple services. It depends upon the size of that logistic company and the infrastructure they do have, right? And not possible that all the companies, unless until they are big enough, doing all type of services, because they require the infrastructure also. So we'll understand one by one. So what is the transportation services? So transportation service is basically the movement of goods through road freight. The road freight is basically you use to transport goods via highways, including trucking and other mode of transport, like the rail freight. This rail freight is used for long distances, bulk cargo. Air freight is used for the you know for high value or time sensitive products, to send the goods on fast and efficient shipping manner. Sea freight is basically ocean shipping for large quantities of goods, commonly used for trade and bulk cargo. Multimodal. So multimodal is basically multi-mode of transport. So multimodal is basically combining multiple mode of transport like truck, rail, and sea to optimize cost of efficiency. So, for example, if a company who is having the factory in Nimrana and they want to ship their goods to their customer in Dubai, so one the process could be like from Nimrana to Delhi by road, Delhi to Chennai by train, and then Chennai to Dubai by ship, and then Dubai to the customer factory gate by road. So one company will provide this from Nimrana to Dubai factory gate of the customer services, will be called multimodal logistic partner. And then warehousing and distribution. So this is another type of services logistic partner provide, like this, safe and secure of storage for goods. They have the lease agreement. Many a times they have the lease agreement with the warehousing companies. They hire the warehouses, and sometimes they, have their own piece of land and they develop the warehouses. Inventory management, they do manage the inventory, including tracking and forecasting product stock of the customers. Pick and pack, collecting product from warehousing cells and packing them for shipment. So this is another services under the warehousing and distribution domain. Cross docking, a practice when incoming goods are directly transformed from inbound to outbound transport without long-term storage, minimizing storage time. Distribution network management, organizing and overseeing the distribution of goods to retailers, wholesalers, and end consumers. So I'm trying to give you the visibility, like, how they are working. I mean, how different type of logistic companies are providing different type of services, right? Then next is supply chain management. This is very important. I mean, very big, because the company who provides supply chain management, these are usually big in size. So end-to-end supply chain solutions is basically integrating various logistic functions to optimize the entire supply chain from raw material to final delivery. Raw material to final delivery means, suppose you outsource everything, like from raw material procurement. If you want to procure the material, you may be importing from other countries or maybe from domestic market. So you require the transportation services, you require to comply with the local regulations of the particular state or the country. And then after importing, you need to store. For that, you need to have the warehouses. And after storing, then you need to supply. You need again the transportation and the other custom and other related services. So these end-to-end supply chain solutions are provided by the logistic partners. Supply chain visibility, basically to track the shipment and to monitor the supply, where I mean, to give the real-time access of visibility of inventories. And then demand forecasting. So they are working as a management team. So they forecast the demand, predict that customer demand to optimize inventory and supply chain operations to reduce the cost, and vendor management. So they coordinate with the suppliers, manufacturers, and other partners to ensure timely and efficient product flow. So they do all these services also. And apart from this, next is freight forwarding and customs, basically CHA services. So they do the they organize the shipment of goods across different carriers, routes, and mode of transport. So if you are doing the audit of these companies, so you need to check the agreement at different stages of uh, vendors, like the carriers, routes, and mode of transport. Custom clearance, handling the documentation and compliance requirements for international shipping, ensuring goods pass through custom without delays. So these services, I mean, the custom clearance, basically kind of legal and technical services also provided by the logistic partner. Import export services also facilitated by the logistic partner under the category of freight forwarding and customs. Packaging and labeling. If you say like everything I'll manage, but I need packaging and labeling services. So these kind of services also provided by the logistic partners. So they securely pack the goods for you and ensure the labeling as per the regulatory requirements of the country, the respective country, including barcodes and tracking codes, so that the goods which is delivered to the customer can be tracked easily. Last mile delivery. So this is another interesting services because of e-commerce growing in India. So managing the final leg of supply chain from distribution centers to end customer, especially importance for e-commerce, as I mentioned. Home delivery, these days, like Amazon, Flipkart, and other e-commerce companies, so they are supplying on a short, I mean, very next day home delivery of products. So for that, they require specialized vehicle also, like for the big machinery or the big electronic equipments. So they require the truck or the bike, or I mean, it depends upon the size of that parcel which you are going to deliver. Same day or next day delivery, offering expedited shipping for time sensitive shipments. So this is very interesting. I mean, emerging services of logistic partners. Reverse logistics, basically return management, repair and refurbishment, and recycling and disposal. So these are also managed by logistic partners. Technology solutions. So if you want to take the help of technology in terms of tracking and tracing the systems, uh, uh, tracking and tracing the products or shipments using GPS, RFID, or barcoding systems. So there are companies, tech companies, who are in the logistics and provide these kind of services. They provide the warehousing management systems. They provide transportation management system and electronic data intelligence for shipping and logistic document to improve communication and efficiency. So this is under technology solutions. Consulting and optimization. This is another interesting area, which is the companies in various countries, including India, are doing for the complex and to improve and to reduce the cost of logistic also. So logistic consulting is basically providing expert advice on optimizing supply chains, reviewing cost and improvement of efficiency. Route optimization, basically they will analyze your existing processes and optimize transportation routes to minimize fuel cost and delivery time. So they will give you the consultancy for that. And next is the cost reduction. So they will identify in the existing processes the opportunities for reducing the logistic related expenses such as packing, shipping, or storage. So they will change your packing pattern. They will, guide you. I mean, how much material you need to store, when to store. I mean, they will identify the areas and suggest you by way of report. Specialized services. So as I mentioned, these days, I mean, so it's a like global movement. It's not something like you are dealing in Indian market only. So suppose for cold chain logistics, so you need the expert logistic partners who can, uh, help you in transportation and storage of temperature sensitive products like pharmaceutical and perishable foods. So, and another is the hazardous material shipping, basically specialized services for transporting dangerous goods safely, complying with regulations. There are lots of regulations which needs to comply before transportation from one place to another in respect of hazardous, especially like the chemicals, fuels, etc., or uh, the gas also, and sometimes defense products also. Heavy and oversized cargo, specialized services for transporting large, heavy, and bulky items. Like if you want to set up a turnkey projects in India, like the bulky plant, so you can import from another country to India. But for that purpose, you may require the company who can manage that product to deliver at your place, right? So for that purpose, you require the customized transportation and handling solutions. So we understood, I mean, what kind of services logistic partners are provide in a broad manner. These logistic partners can integrate these services to provide end-to-end solutions for businesses to enhance efficiency, reduce cost, and ensuring timely delivery. Right? Okay. Let's understand the risk. So this is part of SA 315 also. Like we need to understand who is the entity and what's the risk in particular entity and the industry. So let's understand the regulatory and compliance risk. So one of the risks in the regulatory and compliance domain would be the complying with sanctions and trade risk. I mean, we are discussing like what could go wrong if we are in the logistics sector, right? Or a logistic company. So one risk we are expecting like uh, the compliance with the sanction and trade restrictions may get missed. Means if you are supplying customer goods to the country which is having the sanctions unknowingly, and if you wrong by mistake or inadvertently supplied the goods to that particular country, and you are not aware, or your team is not aware that there are sanctions on that particular country, so there might be a risk, or there might be a fine on your company, and there might be a restriction on trade of particular products or particular goods from particular country, right? If you are doing with any country who are having the trade restriction with India, so then there might be a risk of access to key markets, right? And changes in tax laws and policies. So this is another very interesting, I would say, the risk. If you are a MNC, you are operating in multiple countries, and that country increases the taxes, so that will directly impact your cash flows, because ultimately you need to pay the tax liabilities as per the increased rates. And if they change the policies, for example, in especially you might have been hearing that Grab 4 is implemented in Delhi NCR. So ban on diesel uh, based vehicles, right? If I mean, suppose a government comes with the provisions that only CNG based vehicle can be fly in a particular state or city, right? In that case, what companies will do? They need to hire or they hire purchase the vehicles, and they may go for the procurement of CNG based vehicles, right, to serve the clients. So ultimately, that may leads to the financial burden on the company. Anti-bribery and corruption compliance is basically the area where, because this industry is labor-intensive industry, and lots of compliances needs to be complied with. There might be a risk that when someone gets involved with somebody to give bribe or corruption, so to mitigate that, there might be a control with the company, but again, this is the risk. This will damage the reputation of the company if this goes wrong. Operational risk is basically inventory management and stock losses. So logistic companies are managing the inventories on their customer behalf, and they are storing them. So in case their system is not properly managing their inventory, the people are not trained, and the system of storage is not safe, there might be a risk of penalty or damage claim from the customer side. Another is supply chain disruptions. The supply chain disruption is basically like if you are dependent on few customers only, and in case something goes wrong on their factory side due to earthquake or something, so your company will not be having anything to deliver. So in that case, because of non-supply of non-getting the good for supply, so you might not be having any business. So business dependency on one of the client would be because of the disruption at the factory of the customer. And another would be the classic example is the pandemic. So during the pandemic, everything was went shut down, and because of many restrictions in the state, countries, right? So everything was on halt. So because of that, the company paid the salaries to the staff, the idle staff, because no work because of supply, lack of goods to supply, and another was the fuel cost, because the truck is if the truck or goods supposed to deliver in 24 hours, that was taking 10 days or 15 days. So the cost of flying that good from one place to another was increased. So the pandemic is another area where because of supply chain disruptions go hit. Dependence on third party vendor, it's again a very interesting one. Uh, if you are using the help of tech companies to provide tracing and tracking of your shipments, and if something goes wrong with them, then this will directly impact your company. Financial risk is basically if you are capitalizing for particular project, but if you are not properly at estimating the capital expenditure, there might be a overbooking of capital expenditure, or that expenditure which you are incurring might get outdated because of the innovation and other things in the market. So that might be a risk. Delay in collection from the customer or delay in customer payments is basically if you are not getting the funds on time from the customer side. So this will ultimately have the uh, cash flow mismatch situation. And in case of cash flow mismatch situation, this will directly hit the financial of the company. You may not be able to run the operations, and that may ultimately leads to the going concern issue. Complex contract with customers, like in the supply chain contract especially, you might need to carry out the multiple services, and you need to ensure that each and every milestone gets completed on time. If that goes against the due date defined in the contract, then in that case you may have the financial claim from the customer side. This is the again very uh, common risk in the financial risk domain. Next is the technological risk, because these days almost all the companies in the logistics sector are using the technology. They are automizing their process. Their process are digitized, But again, since you are having the data is basically the key nowadays. So you are having the data of your customers, end customers, because you need to supply the goods to them. So if anything goes wrong, if like cyber attacks, unauthorized access to your system and data breaches happen, so there might be a risk or the penalty from uh, the customer side and the end user customer side on your company, and that will damage your reputation also. I mean, yeah, I'm just discussing from a logistic partner, not from auditor here. So complex software systems and obsolescence of technology. So if you are using complex software system which your team is not familiar with, then again it's a risk, because you have the technology, they may, but if they are not able to use that, no point. You will be having the failure in that domain. And at the same time, you are having the technology, but that's the obsolete. Obsolete because of the innovation in the market. People want, I mean, real-time tracking. If you are not able to provide that, then there might be a situation that the technology which you're using is obsolete, or it gets obsolete over the period. I mean, maybe today it's live, it's good, but maybe tomorrow it's not feasible in terms of other competitors in the market. System failures and downtime. Again, if you are using technology and something goes wrong with the systems, right? You're not able to track, monitor, trace your shipments, right? Your inventory management, your warehouse management tool goes crashed. In that case, I mean, that would be complete failure. No one will come to you. I mean, to the technology company, and again, that would be a risk of business loss, right? And downtime. Suppose if your software is not able to meet the expectation, suppose in a Black Friday sale or on Christmas or Big Billion Day sale, if system goes crash, I'm just giving you a hypothetical example. If system goes crash, what would be the benefit of using this technology, right? So your system may go fail, but you need to uh, you know put the controls in a way like the infrastructure should be strong, so that they can manage the pressure or a high demand time, the season time. Market and competitive risks. So intense competition, yes, this is the risk, and there are lots of big players, MNCs are coming in this sector. And demand volatility, it's a risk. You are not able to, I mean, anticipate the demand. So, and if you fail to manage that, then it's a risk of business loss. Again, customer preferences and service expectations. These days, uh, everyone wants the best services, right? And everyone wants to have the different type of goods to deliver. If you're not able to meet that, you may not be able to serve them. Next is the HR resources and labor risks. So this industry is basically labor intensive, I would say. So if you are managing the warehouse, you need the people. If you are supplying the manpower to the company to manage their, warehouse at their warehouse only. So for that also you need the labor. So you need a gig worker, you need daily wage worker, you need the labor to continue on a monthly basis. You need, apart from the employees you have on payroll. So in case of labor shortage and strikes, you will having the risk of business loss. And because of huge number of staff, so this might go against, uh, in case something goes wrong, then you need to compensate them. I mean, logistic company need to compensate them. Employee training and development, again, it's a very interesting risk, I would say. If you, I mean, suppose a government implemented new policies or new norms, and if the employees are not trained, not skilled enough, they may not be able to serve your customers on a timely manner, or in a way which is expected from the regulators and the customers. So this is again a risk. So this is, friends, this is basically the sector specific risk. There might be other risks also, but broadly, these are the risks which is related to the sector, right? The company specific risk might be plus or minus, but broadly, the sector having these kind of risks. So let's understand in detail about the audit procedure level risk, right? So, friends, so we need to carry out the audit procedures at three level: planning, pre-planning level, execution or performance level, and the completion and conclusion level. So let's understand at planning level. So audit planning is like logistic partner is backbone for an Indian economy. Similarly, the audit planning is the backbone for an audit, right? So well planned is half done. So if you are putting good time on audit planning, so your 50% audit is done. Believe me. So let's understand one by one. So independence. So we should be independence. We all know. We means our firm, including audit partners and the engagement team, QR. So one point I must say that we should not only be independent by behavior, we should also be independent by our appearance. For example, you are saying that yes, I am independent, but at the same time, it should look like you are independent. I mean, every time you are having the party uh, with the concerned auditee, and you are, having birthday parties, anniversaries, you are sharing gifts, everything. I mean, I'm not saying at a personal ground you can't do that, but at, at appearance, if somebody will look at you, this would be look like yes, you are having the influence by that person on you, right? So independence should be in appearance also. Next is understanding about the entity and industry. So as you can see in the previous 3 to 4 slides, we are just understanding. We are just understanding about this sector, right? What is logistics sector? What is transportation, right? What are the risks? How this country is working toward this sector? How this sector is growing in this country and globally? How they are operating? Now we need to understand entity also, like who is the promoter, who is the shareholder, I mean, who is the directors, who is that line of leaders, and who is I mean, those charged with governance or the audit committee, right? And who are the lenders, who are the investors in this company, right? And I mean, how many plants they do have, what's the structure of this company, right? Are they working on a common control, are they working on a decentralized control, right? And then industry, we need to understand, I mean, whether this company is working based on the other companies in the industry, or they are working before acceptance based on the information provided to you by the client. Before acceptance, you need to see whether your client acceptance criteria as per your firm policies are met, and then you need to identify whether the client which you are accepting is having the low, moderate, or high risk. And if you are having the high risk client, again, then I would suggest to take the help of experts, or take the consultation from the senior leadership team before acceptance. Then do the engagement formalities as per the standards on auditing, and take the prior approval from audit committee for other services like the statutory auditor certification, which usually auditors do, right? Here, prior approval from audit committee for other services means the services which is the nature of audit only, or the capacity of auditors. This is not, I'm talking about from non-audit services. So engagement team having relevant experience. This is again a very interesting area at the planning level. Please, please identify the team who is having the experience of that particular industry and or client, right? And I mean, suppose, I can give you the example also. For example, a team who having the expertise working in a BFSI sector or the banking sector, right? And if you are deputing that person on logistics sector, so at least he should have the experience or uh, have some, technical abilities to manage that client. Otherwise, there might be a challenges at your end to get the quality audit, right? Risk assessment, this is required as per SA 315, 330, right? So we need to identify the risk and give the response to the risk. So before, we need to collectively take the inputs from the understanding work paper and the industry analysis which we have do, and the client acceptance and the data available in the public domain, apart from the specific information which we have received from that particular company before finalization of significant risk, and identify the fraud risk also, apart from presumed fraud risk, which are revenue and management overhead of controls, right? And if you are not considering revenue and management overhead of controls as a fraud risk, then you need to clearly explain in your audit file why you are debuting them, right? And of course, minutes of meeting with the EP, basically engagement partner, EQCR, engagement team, TCWG at various stages of audit, not only at planning, is required. If minutized, if your meetings are not minutized, as you can't substantiate like what we have discussed in that meeting, which is required as per the standards on auditing. And believe me, if you are not documenting, then it means not done. If you're having verbal meeting or just casual meetings with the client, and you're not having any meeting minutes with you, then believe me, you're gonna get the gap in the audit file. You'll not be able to explain to the reviewer or the regulator that you did this work. So you need to carry out, first of all, you need to have the meeting with the appropriate user of that particular auditee, and then minutize that. Share with the client, get the clearance from client that yes, this was the discussion, they need to accept that, then you need to put it in the audit file, and that needs to be signed off. Materiality, because we need to carry out the audit procedures, and especially the substantive audit procedures based on the materiality. So we need to see what would be the good benchmark. If your company, the logistic company, is having the operations, then you can consider the revenue or the EBITDA as the benchmark, right? Or if the company is new, recently incorporated, having just pre-incorporation expenses or something, then you can just take the total expenses as the benchmark. And if the company is recently incorporated, but you capitalize some assets on that company, but operations are zero, you can go for the total assets. This should be entity wise, not at a group level. If you are doing the audit of a group, not only a single company. Sampling methodology, of course, this should be done as per the firm methodology, but need to take the guidance as per the standards on auditing. And again, the documentation of sampling needs to be placed in the audit file with the work paper attached to that. Consultations, though I mentioned at client acceptance level, but yes, consultation is that which is required the involvement of expertise from auditor side, not only from the auditee side. So, for example, these days we need to carry out the audit trail testing, ITGC, ITAC. So for that matter, you need to involve the IT experts also. And there are tools of, company, if or your client is using the technology. So for that matter, you need to otherwise involve the IT specialist. Otherwise, we may not be, we being an auditor may not be able to give justice to the audit procedures which we are supposed to do. Correct. And if you are facing some technical issues, I would recommend to involve the industry expert, right? Or the technical expert or the senior leadership team before a conclusion of that particular area, either at the acceptance level or the sampling level or the risk assessment level. Okay, let's understand at execution level. So execution level is basically we will check each and every key aspects of the financial statements, and we'll cover in our audit procedures, right? So one thing before I go for audit execution, one thing I would like to convey, friends, audit is just not the ticking, right? So we need to understand the economics also, right? If we are not, if we are not analyzing the numbers, why the companies, why your client is investing in particular company, why they are investing in capital, right? What's the outcome they are expecting from the capital expenditure, why they are setting up the warehouses at various locations, right? What is the margin? If they are operating on a thin margin, what is the strategy of the company? If you are not getting into economics, right, believe me, you may not be able to achieve what is expected, right? So I would recommend that we should go little into the economics also. Why the company is having the contracts with the multiple vendors and customers, what's the objective, what's the panel provisions, right? Okay, let's understand the key considerations at execution level. Okay, this is one of the favorite area of mine. So internal control over financial reporting. So this is the requirement of Companies Act. So we, being an auditor, needs to report if the company is having the turnover above the threshold, right? There are other limits also. So assuming that the company is having the criteria when the ICFR needs to be reported by us, we need to understand, right? We need to understand the business, like we discussed in the previous slides. We need to understand the sector specific risks, similar to the previous slides. Then we need to obtain the understanding on key business process. Obtain means you need to sit with the respective process owners and understand how they are, doing or complying the process in which is written. For example, how they are capitalizing the property, plant and equipment, right? What's the process starting from, end to end? What's the, process for borrowing? What's the process for, I mean, procure to pay, revenue to cash, payroll, FACP, investments, cash in bank, ITGC. So you need to get the complete understanding. Then you need to get the data from the client, which we call which we do IPE testing. IP basically information provided by entity testing and walk through a processes. So IP testing is basically you need to understand. Who gave you the data? What's the quality of data? What's the source of data? Whether the data is tampered or not. So you need to carry out the testing of quality of the data you have received from the client side. Then carry out the walkthrough of complete process from end to end level. Then select the sample for testing and then do the design testing and the control testing for the effectiveness evaluation. And if your client is having multiple companies, like one is the holding and the other are the subsidiary companies, say 20 to 25 companies, for example. So you need to evaluate whether shared service approach or the group common environment approach are followed by the companies or not. Means if the company is having the common directors, common shareholders, common system, common process owners, everything is common, only just for the sake of getting the contract they are operating on a different entities, or because of segments wise operations they are having the separate entities, but everything is done at the head office level. So then that would be the situation of group common environment approach. For that matter, you need to design your processes and controls accordingly. Testing of process and designs accordingly. Outcome of control testing after getting all these processes done, the control testing outcome will directly impact. Suppose if after control testing you get to know that yes, controls got failed, you are going to give the adverse opinion, right? You can't rely on the controls. Then you need to increase or your substantive audit procedures to the highest, other, or vice versa, right? So this required at all the stages of financial statement line item. Control testing is must, and then you need to go ahead for the substantive audit procedures. Okay, so let's understand the revenue recognition in the logistic companies. Revenue recognition is basically it depends upon the companies. Like you might be having the companies who are following Ind AS. There are companies who might not be following the Ind AS, following the AS accounting standard, or IFRS or US GAAP if you are dealing with the other companies audit. But we are here discussing the Indian companies audit. So first review the accounting policy as per the applicable framework, like the AS or Ind AS. Examine contracts and agreements. That's the very important area, because from that only you will be able to understand what kind of services they need to provide, right? And what are the milestones defined in the contract, and what are the terms and conditions, and what are the performance obligations, whether that's the complete supply chain or that carry only one of the services like the transportation. And consider the terminated also. For example, you entered into a contract with one of the customer A Limited, right? And the contract value was 100 crores, and for that purpose you set up your warehouses, also additional warehouses, to meet the requirement of that customer. And later on, if that customer say, sorry, I am exiting from this country, or I am changing my product, or I am not able to continue with this contract, so in that case I'll compensate with you. So the compensation accounting you need to see, I mean, when that compensation was due, whether that's if you are getting your client is getting this compensation post audit, whether you need to comply, you need to check whether that's a subsequent adjusting event or non-adjusting event, whether disclosure given by the company is correct or not, whether that would be the revenue for the current year audit or the subsequent year audit, right? So that you need to check whether that is complying with the subsequent event conditions or not. Then next is examine revenue recognition method, because in the logistic company especially, you need to see whether uh, I mean, it's completely dependent upon the milestone, whether you are recognizing on percentage of completion method or a completed contract method, like over the time or point at a time revenue recognition. Analyze third-party invoices, contracts. Suppose you are having a contract with the customer based on the back-to-back cost. Suppose you are taking the help from another company also to help your main customer. So revenue based on third-party invoices or contracts needs to be validated. Examine delivery of performance milestone, right? So we need to make sure that the milestone which is written in the contract has been delivered with the underlying documents, right? Examine transportation and delivery records. So you can check the transportation logs, delivery receipts, shipments tracking with the system of your logistic company for which you are doing the audit, or if they are you taking the help of other tech companies, you can ask them to provide the reports and verify that. Check the variable consideration adjustment as per the customer contracts, for example, discount, returns, rebate, etc. as per Ind AS 115. That's I'm not going into the detail about Ind AS 115. Otherwise, whole technical session will go around the Ind AS only. Check compliance with regulations and standards. There are multiple compliances and regulations needs to comply with the logistic company, right? So, for example, the hazardous materials shipment, so that needs to be complied with, and the impact on the company. So check those also, and obtain the confirmation of lead customers on also to ensure that the collection is not doubtful, and assess the impairment for overdue trade receivables. Test invoices and revenue, underlying contracts and performance milestones, and reconcile sales register with general ledger, and carry out the cutoff testing, especially for the projects which are having the multiple milestone to be completed by the logistic company. And then GST RECO, again, very important to reconcile with the GST portal and sales as per financials. And last but not the least, the disclosures, evaluate disclosures as per applicable framework. Correct. Key audit area. Again, next area is payroll and manpower, as we discussed in the previous slides. So we need to understand the payroll system and policies. So every company is having their own set of policies to compensate their employees, and then obtain the calculation working of payroll of employees with headcount analysis. You need to understand where are how much is the total headcount in the company? Where are they put up? Which companies are using the or taking the help of the manpower which are on the payroll or under the contractual arrangement with the logistic company, and are they insured, and what kind of compensation they are getting, whether PF and ESI or bonus or the leave encashment are properly calculated and deposited as per the statutory timelines, and whether the provision for leave encashment is properly accounted for in the financial statements or not, and ensure and check the timekeeping and attendance records. Because many a times you will find that only 100 or 150, very few staffs are on the payroll. Majority of headcounts are on the contractual arrangements. For that matter, you need to carry out the testing of the contracts also, whether that contractor is, depositing their PF or ESI to the particular labor or not, and that requires intensive detailed testing, right? And for the employees or the other regular staff, you need to check the F&F also, who left the organization. And not but and apart from this, you need to carry out the actuary valuation testing also to understand the assumptions, understand the discount factor, interest rate which they have considered. Some many a times I have seen that there are errors in date of joining, sometimes you know uh, date of transfer from one unit to another. So because of that, there are sometimes issue in actuary valuation data, and which they send to actuary. And if they are not sending the actuary data correctly, so there might be a situation that the input which they will be getting would be incorrect. So I would recommend to carry out the thorough review of actuary valuation data. Inventory management and warehousing. So this is again a very, very important area. We need to evaluate inventory tracking systems and testing thereof. So first of all, we need to carry out, being an auditor, we need to carry out the testing of the software which are impacting the financial statements, right? So check those and do the testing and analyze the reports driving from the tool and the underlying reports which are available in the software. Understand customer inventory cycle. What's the customer inventory cycle, like 30 days, 15 days, daily, or fortnightly? Test inventory listings, review inventory aging report, and company scope. Company means the logistic company scope, what they are supposed to do. Or are they just storing, or they are managing also, like the tracking tracing also. Observe physical inventory counts. So many a times the company is required to physically verify the inventory also and to report to the company for their audit purpose also and for the internal MIS purpose also. Reconcile physical accounts to reports of the customer. Evaluate cutoff procedures, insurance coverage. We need to ensure that the coverage of insurance should cover the material available with the company. Evaluate inventory movement, whether the inventory which is moved from warehouse to another place or from factory to another place which they are managing is correct. Review warehouse expenses and cost allocations. Correct. So why I'm saying if warehouse expenses are increasing, it means that they are adding. There might be a increase in the lease rent, or there might be a increase in uh, addition of warehouses. So if warehouses are increasing, then in that case, that needs to be supported with the underlying revenue. Or in case the lease rent are increasing, if the company is saying that no, there is no increase in revenue, so it means their margins are getting reduced, and at the same time, this may require the right of use uh, calculation. This may impact right of use calculation as per Ind AS 116 that you need to check. Assess the impact of inventory write-downs and provisions if there are inventory write-down because of the mismanagement by the logistic company, or that in the scope of the company, that you need to check and ensure that the provisions are accurate. Controls for confirmation of warehouse inventory to customers or their auditors. So we need to ensure that, I mean, how they are operating and how they are confirming the warehouse inventory to the customers or their auditors, and whether that be appropriately disclosed in the financial statements or not, or appropriately reported in their tools or not. Key audit in key audit area, the fuel and maintenance expense is one of the critical area. We need to review the management expenses recognition policy, fuel receipts and invoices with the contracts we have with the petrol pumps or the other agencies, and verify fuel usage with fleet records, reconcile fuel purchases to fuel inventory, review and inspect vehicle maintenance invoices, review accrual and prepaid expenses for annual maintenance charges, analyze expense ratios and compare expenses to budget. So in the fuel and maintenance expenses, I must tell you that these days expenses are increasing. Expenses of maintenance and fuels are increasing. If they are having the back-to-back arrangement, like the escalation clause with the customer, for which they are providing the services, the logistic company are providing these services, then cross-check whether they are back-to-back claiming from that customer or not, right? As per and recognize that escalation claim as per the accounting standard, applicable accounting standard, AS or I mean AS9 or Ind AS 115. Correct. Property, plant and equipment. Obtain detailed listing of property, plant and equipment. Verify the existence and ownership of PPE. Review the cost and acquisition of PPE on sample basis. Check for just a second. Check for consistent depreciation calculation. So basically, we need to carry out the performance of depreciation, and then check the disposable and impairment of assets. What was the reason, whether that was approved by the board or not, whether that was the significant one which required the disclosure in the financial statements or not, and whether that is impacting the the company operations or not. For example, if you invested in, I mean, say 10 warehouses, right? And those 10 warehouses were of I mean, that's basically the warehouse management services. For that, you incorporated a separate entity, and later on, that uh, out of the 10, 5 or maybe 6 not required. So in that case, you need to see whether that's going to impact that particular SPV or not, or whether that impairment is because of that the client reduced the business. So what would be the future of those 6 warehouses? So in that case, we need to understand the economics, right, of that particular project, whether that's going to be feasible or not, whether they can use that at other place or not. Otherwise, that required impairment. We need to carry out the impairment testing for all the segments of the logistic partner uh, PPE. Then review capitalization of maintenance and repairs. There might be a situation that they are capitalizing the revenue expense or vice versa. Evaluate disposal and retirement of PPE, right? Assess PPE related contract and agreements. Basically, this is mainly when you are having the contract for the development of factory or building the large assets, and to develop the intangible assets also. Compare to industry norms and perform trend analysis. Check, I mean, what is happening in the other companies in the same industry, and then carry out the trend analysis and ensure that the life of asset is in line with Schedule 2 of the company's 2013. And if not, then there should be a technical justification in the financial statements disclosure notes. Impairment of PPE. So we discuss at length, but yes, we'll give you the another flavor here. Regular assessment for impairment of transportation or logistic assets, especially in the context of technological advancements. Suppose you capitalize the tool earlier, which is now outdated, so there might be a requirement of impairment, or something goes wrong, or because of earthquake, flood, and your warehouse or the assets go damaged, then you need to see the impairment requirement and the policy changes. Suppose you are using, diesel vehicles only, and now if government says that you need to use only CNG vehicle, then this may require the impairment of those vehicles. Obtain asset-wise impairment assessment analysis, like segment-wise, like all the vehicle-wise or the respective warehouse or the assets-wise. Evaluate key assumptions, discount rate, future cash flow, period of projections used in assessment analysis, and involve expert. Of course, as I mentioned, the consultations at the planning level, like you need to involve the expert also, right? You cannot be expert. Auditor cannot be expert in each and every field. So you need to hire your expert auditor as expert to help you in a better way. So discount, if the discount rate they are not getting appropriately, or they are doing incorrect adjustment, right? As per India 36, right? Then you need to tap those errors and identify and escalate at management level to correct those, right? And examine the estimates used by management does not have error. There might be a possibility that they may do some error in Excel, or they might not be interpreting the law or the standard correctly. So you need to carry out that evaluation, and then carry out the sensitive analysis. For example, if they are considering 6.5% of discount factor, and uh, the headroom is very thin, the moment you consider 6.75, that may convert into loss, right? So that sensitivity analysis you need to carry out. And if you conclude that, yes, if you do the sensitivity analysis, there is a requirement of impairment, then you may propose and discuss with the audit committee and propose the impairment project. Key audit area, leases. In a logistic company, majority of assets, because they manage the inventory also, so they don't have, usually don't have their own warehouses. They entered into a lease with the the owner of the land, and they developed their assets, warehouses, based on the requirement of their customers, right? So for that we need to so they might be having n number of lease agreements. So we need to check the classification of leases as per Ind AS 116, and then verify the recognition of right of use assets and lease liabilities, whether the right of use assets are correctly computed, and corresponding liabilities are correctly computed, and what is the you know discount rate they have used, and what is the periodic assessment of the lease term based on the significant event or changes. I mean, are they considering the useful life as per the contract, or are they considering the different useful lives? So you need to obtain the rationale about the different useful life which they are considering, and what is the treatment they are doing for the free lease period, right? That you need to consider in your audit procedures. Validate the appropriateness of discount rate used for for calculating the present value of lease payments. So for the discount rate, uh, I would say that for each and every calculation of right of use asset, discount rate should be same it should be at company level. It should not be at the contract level, right? So the basis of discount rate should be readily available with you from the company side, and ask management to you know uh, give the rationale of using that particular discount rate, and then verify the compliance with the Ind AS 106 requirement in terms of accounting and as well as disclosure, apart from amortization, and carry out the re-performance of amortization of right of use asset, correct? And following the disclosure requirement as per Schedule 3 of the Companies Act 2013, again, it's a borrowing because it's a capital intensive industry. So there might be two or three type, basically two type of, I would say, in a broad manner, two type of borrowings. One could be the borrowings from your parent, I mean, the company is having companies incorporated in India and their parent company is outside India, say Japan, Europe, or the UK, US. So if company is based out of India, so they can get the uh, borrowings in external commercial borrowings and might be having the I mean depending upon the requirement, 5 years or 10 years or 3 years of life of that loan. So we need to validate that, and there might be a loan from the Indian bankers also, right? That we need to see. So we need to review the loan agreements to understand what terms and conditions, covenant, and payment schedule. Trace the loan proceeds from bank statement. We need to see whether the funds were disbursed and credit to the bank account or credit to the other than bank account of the company. I mean, maybe the director or the employee or the somebody is doing the fraud with the company and taking the funds in their own account. Assess any foreign exchange risk associated with the foreign borrowings. If that currency in which the loan was taken is foreign currency, then you need to evaluate the risk of that foreign currency. Interest reperformance and foreign exchange valuations is required. Carry out the reperformance of interest expense and evaluate and check whether the interest levied by the bank or the parent company is correct or not. Review the calculation of amortized cost of borrowings. If the company is following the Ind AS, then the cost of sourcing the funds needs to be adjusted against the loan. Say if you are borrowing 1,000 crores and 10% or 1% is the cost of borrowing, then that needs to be netted off. So if 10% is say hundreds, then the 900 would be the loan. So 1000 would be amortized over the period of loan. The review of derivative documentation. So we need to see whether the forward contracts or options has been taken for the borrowings denominated in the foreign currency. We need to check the hedging effectiveness as required as per the Ind AS 109. Review the working for capitalization of borrowing costs, whether that needs to be capitalized or whether that needs to be expensed off. That we need to see in detail. Test compliance with covenant requirement. For example, if you want, you need to, for example, if the logistic company had borrowed the money from the Indian bank, and if the one of the condition is that if you are not able to submit the audited financials on time, say 30th September, then we will ask you to pay the loan on demand immediately. Basically, that loan will become repayable on demand. In that case, you need to classify that loan from non-current to current. So we need to strictly test the compliance with covenant requirement, then obtain direct information from the lenders for both INR and foreign borrowings, right? There is no exception for this. Account payables and receivables, it's again, basically this leads to the uh, cash flows. So whatever you are paying and whatever you are getting, it should be, everything should be in order. We need to understand the accounts payable and accounts receivable recognition process and relevant internal controls. So friends, in the previous slides, whatever areas we have gone through, every area needs to have their internal control testing, right? The first step we understood, like we need to carry out the control testing, right? Control testing requires for each and every domain, each and every area of financial statement line item as where IFCFR is applicable. So here, understand the AP and AR recognition process and relevant internal controls, then test the accuracy of account payables and account receivables. What do you mean by accuracy? Accuracy, basically, we need to understand that the amount of which is appearing as payable and receivables are correct, and then verify the aging of accounts payable, accounts receivable based on the underlying system provided by the client. And if they are using doing the aging in Excel, you need to analyze and check the controls how they are preparing that aging and what's the rationale they have taken, whether the aging is based on from the due date after considering the credit period or from the invoice date, that needs to be tested. Then test cutoff at period end and obtain AP and AR confirmation. Examine allowance for doubtful discount accounts as per applicable standard. For example, in days 109, perform subsequent payments. So before I go in next step, for ECL, what we usually do uh, in this framework. So I would recommend to carry out the testing of estimates or the discounts they have considered while computing the ECL, and that is completely dependent on when we are using simplified approach for trade receivables. That completely dependent on the provision metrics, right? So bucketing. So as per Ind AS 109, we need to compute the ECL and we need to carry out the provision metrics. For that provision metrics, we need to uh, uh, consider the base data of trade receivables aging. So if aging is not correct, then the migration or the provision base rate would be incorrect. Then ultimately the ECL rate would be incorrect. So I would recommend that please check the aging in detail and then how they are, using this data while computing the ECL as per the requirement of Ind AS 109, and then uh, discuss in case of any anomalies with the client and escalate at the next level then. Perform subsequent payment and receive testing along with trend analysis. I mean, what's the average collection period or average payment period for the client, and and see whether anything is unusual and require specific provision, like the disputed cases require the special provision or the treatment. Review approvals for payables, return back or bad debt return off is required, and we need to obtain the approval from the respective authority as per the delegation of authority metrics available to the company, and then document the processes what we have carried out. Going concern assessment, that's very important, especially in the logistics sector company. So when we read this, you will be able to connect that yes, these are applicable or may be applicable going forward if this situation arises. Check the net liability or net current liability position. This is primarily talking about the current asset position, liquidity position. So if your customer is not making the payment to you on timely, or your vendor's credit period is reduced, then this could be a cash flow mismatch. Check for the withdrawal of financial support from creditors. They are reducing the credit period. Check for negative operating cash flows. I mean, you are continuously running in losses, then you need to check. As I mentioned, we need to understand the economics. I mean, why the company is running on losses, right? So analyze the key financial ratios, current ratio, liquid ratio, net worth ratio. So that we need to analyze. Check whether repayment of borrowings are regular and whether the company is able to meet its payment obligations. So these are indicators basically. If this is the situation, then you may need to go for the going concern assessment. So this may cast significant doubt on the company's ability to continue as a going concern. Right? Assessment for need for financial letter from parent company. So here I'll give you an example. Suppose your company is under the continuous losses, and they said, my parent company gave me the support letter, financial and operational support letter. Like in case of any financial or the operational crisis, we will support you. So now the question comes: can we rely that? Answer is yes, but we need to do the procedure for the parent company also. Means if the parent company of your client is also facing this going concern issue, how they can support that subsidiary. In that case, I would recommend to go for ultimate parent company if their company is there. So the in that case, the intermediary parent company will not serve the purpose. You should ask the financial support letter from the ultimate parent company. Okay. So the operating indicators are whether management intends to liquidate. So in case yes, then there is a going concern matter. For this, you need to evaluate and read the secretarial documents, the board minutes, the AGM and AGM minutes. You need to read and understood document and maintain the synopsis and identify whether management wants to liquidate the company or not. Loss of KMP in case one of the managing director or the person who was running the company, right? I mean, resigned or died or something goes wrong. In that case, this might be a going concern issue. Shortage of labor and important supplies. For example, if you are working in a particular state or particular country, and where there is a big shortage of labor and important supplies, then you may not be able to run the operations, and that ultimately leads to the going concern issue. Loss of major market or key customers. This is again directly related to the logistic, I would say. Loss of major market means if you are, you want to operate in particular country from India and that country is not allowing you to operate there. So that is a big risk, right? Another is if you are dependent on particular customer and that customer uh, may not continue with you. In that case, the company may go for the going concern issue. Others are like the check for non-compliance with regulatory requirements. Suppose if you are, you are supplying the hazardous material, but you fail to comply with the requirement of regulators. In that case, you may get banned. I mean, the logistic company may get banned. Your clients may not be able to continue in particular territory, right? Or the whole country. Depends. So this may directly hit the going concern. Analyze the impact of pending litigation. So there might be a big litigation from the customer side or the customer side in case of loss of shipments or loss of materials or sensitive materials. Then that pending litigation might be so severe that the company may not be able to serve that demand or the penalties. In that case, that may be a going concern issue. Analyze the impact of underinsured catastrophes. For example, you are supplying the material, but the insurance coverage was so minimal, so you are not able to cope up that. In that case, that may again hit the going concern because everything is regarding the movement of goods, movement of people, movement of the resources. So if those aspects are not covered under the insurance policy, that may give big dent to the logistic company. Key audit area includes litigations, which is another important aspect. So for that matter, I would recommend that we need to obtain the litigation tracker and understand the controls towards that. I mean, how the company is managing that litigation tracker, whether that's complete or incomplete, how they ensure that all the list of litigations are covered in that litigation letter, and then understand the nature of litigations, whether those belongs to the legal or pertains to the title deeds, tax demands, etc. Assess completeness and underline the process to prepare litigation list. And the next step would be obtain detailed understanding of management assessment of those litigations, and wherever experts are involved, obtain confirmation from legal counsels. So uh, here basically first we need to after getting the data from client side including the litigation tracker and after testing the controls that yes, litigation tracker is complete, then we need to have a meeting the with the council of the company, logistic company, and get the confirmation directly from them to understand what is their view, whether they are concluding that that the liability which is probable or possible or remote, right? And apart from this, I would suggest, I mean, this is up to the engagement partner and the team who are working on that. But usually we should involve auditors expert to assess impact of those on the company and ensure appropriate accounting and disclosure in the financial statements in case of area where the expertise is required. For example, direct tax. So if we are not expert in direct tax, we should involve the direct tax partner of your firm to carry out the PPR. assessment for the litigations, and then disclose in the financial statements for discussion with the client accordingly. Laws and regulations, logistic company complying various laws, numerous laws to serve the client, right? So we need to identify which are the laws and regulations relevant to the company on respective contracts, right? Not only the company, contract wise. Understand the entity's compliance framework. I mean, how they are, having the compliance mechanism and how they are reporting to the audit or risk committee uh, to, to the outcome of the compliance they are doing on regular basis. The risk and potential impact of non-compliance would go wrong in case of compliance issue happen. And then design audit procedures to evaluate and to understand the compliance to be carried out by the company. Evaluate legal and regulation requirements and review of management assessment, how management is doing about the regarding legal matters and the other matters. Communication with legal counsel, as we discussed in the previous slide. Documentation and reporting, like how you did. I mean, everything should be direct. It should not be like client is getting the information or the confirmation and then giving it to you. It should be direct from auditor to counsel. It should not be indirect, like to council is getting the instructions from company and giving the reward to the company only, not to the auditor. This should be direct between auditor and legal counsel. Caro 2020 requires physical verification of PPE. If the company is not doing the physical verification in the phase manner, then you need to qualify. Title deeds physical verification, considering high volume, you need to carry out in detail and plan well in advance, right? And defaults in repayment of loans and borrowings require reporting in the CARO, and check whether there's required reporting in the main report also if there is there's an issue of going concern and the other aspects. Impact of negative ratios sync with material uncertainty related to going concern para. If the company is reporting in the main audit report that there is a material uncertainty related to going concern, right? So they need to give the disclosure note in the financial statements, and that disclosure note reference needs to be given in the audit report as per SC 570. And cash losses reporting needs to be considered as per the guidance note on CARO 2020. Internal audit and linking with ICFR reporting is must as per the requirement of CARO. Kindly carry out the procedure as suggested in the guidance note. Fraud and whistleblower complaints. If you are aware that there are whistleblower complaints which are critical in nature, you need to evaluate whether management has taken the cognizance of that whistleblower complaints or not, and whether you are getting the insights of all whistleblower complaints or not. If you are aware that yes, management is aware and management informed that these are the whistleblower complaints, so you need to evaluate after carrying out the all the procedures apart from the forensic and the special audits, if any required in that company. Then you need to evaluate whether ADT4 is required or not, considering the threshold of 1 crore. I mean, it depends. I mean, it's up to the auditor. I mean, how they are considering the reporting in the CARO and the ADT4 requirement. Exposure to NBFC registration, you need to check whether there is any entity of the group where you are doing the audit, right? That is having the exposure of NBFC, registration criteria and auditor's resignation. You also need to evaluate whether the previous auditor got resigned. If yes, then you need to check what are the matters and how they were resolved, and that needs to be considered in CARO 2020 reporting. Accounting estimates. So apart from all the audit procedures, what we discussed in the previous slide, so we need to focus on the estimates, which are very critical, and these estimates reporting needs to be done with the audit committee also. So one of the area is litigation. So in the litigation, management may carry out, take the assessment that this is the remote, therefore we are not considering as contingent. This is the, probable, we are considering contingent. We are not considering as a liability. Sometimes they are considering liability. So what is the basis of their estimation that needs to be, carry out? That's required detailed audit procedures and documentation through work paper. And then impairment of assets of PPE. What are the assessment which we have considered while carry on the impairment assessment? Impairment assessment of investment of the loan extended to subsidiaries also require the detailed review. Estimates of useful life of PP and ROU. I mean, how much life they have considered while computing the ROU and the PP that's required detailed discussion with the client and the rationale which they are considering as per the business or the contracts with the respective customer regarding particular assets. Deferred taxes estimate future taxable profits. For example, your company or your client, your client is having the deferred asset, and deferred asset is created, uh, say 200 crores, and the useful and the entire life of that contract is 20 years. That company is SPV, and after 20 years, that company gonna shut down. But if based on your computation and the estimation of future taxable profits, you estimated that in remaining period, say 15 years, you'll be able to realize 5 crores of assets only after adjusting the accumulated losses. Then the remaining out of 20 crore deferred tax, 5 crores will get utilized in 15 years. Then 15 crores needs to be, uh, you know, uh, write off. So I'm just giving you an example. You need to check whether the taxable profits are accurately calculated and that's are acceptable. Assumption used for actual valuation for gratuity and leave encashment needs to be checked in detail. Assumptions used for fair value measurement of financial instruments require detailed review. Communication with those charged with governance. So after carrying out the audit procedures, we need to, or at the planning stage. So the communication with those charged with governance or the audit committee require uh, uh, at all the stages of audit. Like at planning level, you need to communicate engagement letter and what is the audit strategy we are going to follow. At execution level, we need to discuss sector specific findings, regulatory compliance issues, internal control related issues. At completion level, also we need to report findings. How we concluded the audit qualifications or audit matters which we discussed in the execution level, and in the conclusion and the reporting in the audit report. And ongoing is basically critical judgments and risks which we face during the course of audit. And documentation is basically maintain thorough records of all communications with TCWG in the audit file. Use the work of internal auditor is the another area where we needs to examine the board and audit committee minutes. What of the meetings we had, the management had with the client, the internal auditor, and the client had the internal auditor. Whether internal auditor commensurate with the size and nature of the entity, that we need to see the effectiveness. Basically, suppose the company is having the 10 areas, and the one of the major area, for example, is borrowings, but borrowing is not under the scope of internal auditor. So that in that case, you may not be able to conclude that the internal audit is commensurate with the size and nature of the company. The EL for scope of work, right? And evaluate the use of report by the internal audit for the deficiency reported, and then assess the impact of controls deficiency conducted by the internal auditor. So this should be completely, synced with the CARO and the other audit procedures if we are using the work of internal auditor. So friends, we discussed at planning level, execution level. Now we will discuss the completion level. So completion and reporting is basically when we completed our field work, audit, execution, and of course planning was done at initial level only. Now it's time to conclude and report the matters. So first step would be, while reporting the matters, our first communication would be with, after management, would be communication with those charged with governance and management with respect to identified business statements and internal control weaknesses. it's not only that we are at the completion level only we will discuss with the client, but during the course of audit also we need to discuss with the client time to time. But yes, the issues we need to summarize and discuss with the audit committee and evaluate and conclude the identify risk and misstatements. Audit procedures for subsequent events also required, and written representation as per SA 580 we need to obtain mandatorily. I want to tell you one thing here. Written sometimes many, uh, in few trainings, I got query that if we are not able to get the data from client, so can we ask client to provide the management representation letter that yes, this is the understanding and this was the data which is not available, but you can instead of writing in the audit report, you can just take the management representation letter, and that's the signed by the client only on the letter. So here I would say that audit procedure cannot be replaced by any management representation letter. Management representation letter is just to confirm that whatever assessment they are considering, they are giving us in the writing. But it doesn't mean that we can, replace our audit procedure with the management representation letter. Engagement quality control review. So engagement quality control reviewer is an independent person, right? So that person needs to be involved at all these stages of audit, like planning, execution, and completion. And whatever review points of EQR is there, that needs to be closed before issuance of audit report, right? And that should be there in the audit file. That should be, that should be, demonstrated that yes, you involved EQCR and their point was adequately and timely manner resolved. Issuance of audit report after clearance from EQCR and the other consultation if you have taken from the senior leadership team of the firm, then issue the report with the client, and post report you need to carry out the assembly and archival of file within 60 days after auditor's report. Now here the catch and the clear, though everyone is aware that this 60 days period is to compile the files, right? Not to perform the audit procedures, right? This is, as the name suggests, archival. This is for the archival only, right? It's not something like uh, someone is starting the audit procedures post issuing audit report. This is completely non-compliance as per the standards on auditing. So the audit procedure should get completed before uh, completion of audit report, before completion of audit procedures, then only audit report can be issued. And after issuance audit report, no one can do the audit procedures, right? Only the archival part needs to be done. So one of the gap which I identified in my uh, reviews and discussions with other fellow colleagues is that we put the data which was provided by the client as it is. We pick the data and put in the audit file, right? So I would recommend that whatever data we are putting in the audit file, we are placing in the audit file, that's need to be attended. There should not be any document which is unattended, and whatever documents you have put in the audit file, that should explain that what audit procedures we have done. Means that we need to mention in the audit work paper that what is the purpose of that work paper, what is the source of that data, what is the nature of that particular area which we are doing, what is the I mean testing and the conclusion. Nature, timing, extent, and conclusion should be clearly appear on the work paper of the audit file. And then work paper should be, supported with the underlying audit evidence. Sufficient or appropriate audit evidence should be attached. There should not be like half-hearted documents you have placed in the audit file, which later on you create a problem for you to explain to the quality or the other internal or the external peer reviewer, right? So your file should be self-speaking. The moment you put the file for review, the file should be in a way that if you were not available in that particular room, your file should give the this the the impression in a way that the person can just open the file and read what is there. And if you're using the tool, the technology or audit software, I would highly recommend that you please do the audit procedure on real-time basis, starting from pre-planning, planning, execution, and completion. Otherwise, there would be issue when if you got fail to complete the audit procedures before issuance of audit report, then this would be non-compliance because you need to put the data in this audit tool, and that will carry the timestamp. So I would recommend to complete the audit procedures before audit report only, right? It's clearly defined in the standards on auditing also, right? And they archive the file and give the referencing for each and every documents which is uh, you know giving the reference in the audit work paper. This should and there should not be any work paper which is lying in the audit file, but nothing was done from your side. So the work paper should carry the audit procedures done by the team, like the planned procedures, procedure performed, and the conclusion. Yeah. So I remember. So many a times, what we did is we have the work paper for each and every capsule, right? But failed to put the conclusion. So conclusion is important. I mean how we plan to conclude, plan to perform the procedures and what we did and what's the conclusion. Correct. So this is something like I would like to emphasize here. And as we discuss in the services, like the services by the logistic companies. So logistic companies is basically one company may have the transportation business only, or another, or one may have the multiple type of services to the customers, right? It depends upon the size of the company. But it's this area is very vast. So not only all the companies providing all the services, it depends upon your client. So you can customize your risk assessment and the audit procedures accordingly. I mean, it depends upon client to client. I mean, one can be the core transportation service provider, or one can be the tech consultancy provider in logistics, or one can be only the consultancy provider, or one can be the complete supply chain management, right? So it depends. It depends upon the client to client. So you need to get the understanding and identify the significant risk and then proceed accordingly. And last but not the least, carry out the budget and actual manners analysis so that you can uh, you know clearly demonstrate that whatever manners you planned at the planning level and the additional manners which you incurred while completing the job is justified. There should not be any serious matter which required additional time, or there might be idle manners also. So that may give you the efficiency of the audit also, this actual and the budget manners analysis. So that's all from my side. Now, forum is open for questions. All yours.
Thank you, sir. That was really a knowledgeable session. Thank you for providing your insights. Now I would request everyone if they have any questions, they can ask in the chat box. Then I can ask the sir those questions. And in the team, in the meantime, I have a question like based on your practical experience,
Mhm.
your actual experience, like what are the common misstatements or like you can say fraud you can find in this transportation and logistics sector? Like what are the common misstatements that we found during our audit?
Uh, in general, I'll tell you there are situations when they entered a contract with the company. It's like their customer, I mean, the logistic company entered into a customer And when we understand the economics, like we got to know that they are incurring the losses, right? Say the contract value is 100 crores, and they need to, on monthly basis, they need to do the billing.
Record. Yeah.
But on the profitability analysis, because every logistic company do the profitability analysis for each and every project. So when we understood, like, what they are doing actually, so they are running the contracts on losses. So,
Okay.
so, eh, so based on discussion, what happened is actually that contract become onerous for them,
Yeah.
and the moment they exit, they need to pay the heavy penalty, right? So they try to avoid that. So what they do, they will not show you the profitability of that particular contract, but because of initial error at the contract entering stage, they try to avoid that. So I would recommend to
Okay.
carry the project-wise analysis and ask them to provide the reasons why they are avoiding that data. And another is the
Okay.
cost. Another is the cost. So there might be a situation like that particular revenue require at a time, basically on completed method, but they are
Okay.
recognizing over the time, right?
Okay.
So 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 the interpretation of contract is must. I mean, we need to understand the clause requirement and the milestone.
Yeah.
Sometimes they fail to provide the data. So if we are getting the insights about the contracts, we'll be able to tap that. So
Okay.
because that will directly hit the revenue.
Yeah. And like another question, like, is there any key disclosures like for this sector which are like major disclosures which are different from journal financial statements audit,
No,
which you
no,
need to
no.
give specific
This
for this?
no specific disclosures. These are in lines with the India's framework and the Schedule 3 of the country.
Okay. Okay. Now think if there are any questions from the audience, and we are happy to ask. Otherwise, I will call the Anil sir for a vote of thanks. So yeah, there are certain questions from our audience. So first of
Okay.
all, question one. In logistic industry, it is imperative to strictly follow inventory management and warehouse efficiency and stock deterioration, both food and non-food products.
Hmm.
How far the internal audit system can optimize this requirement?
Uh, so question is, if I correctly understanding the question, so question is if the company is having the inventory management is a service
Yeah.
and
Yeah.
how internal auditor can help this.
Yeah.
So
Like they need to
see,
follow for both food and non-food products. So how can they efficiently manage?
internal audit and this inventory management. So they both are different things. So if you are talking from logistic partner services, so logistic partner is the provider of inventory management services, right? And the internal auditor is hired by logistic company to see the processes, correct? So it depends upon the scope of the auditor, internal auditor. So if food and non-food both are under the coverage of logistic partner, that needs to be validated by the internal auditor. And if you talk
Okay.
about the inventory management, that's up to the logistic partner company.
Fine, sir. Fine, sir. Next question, Saurabh.
Yeah. Next question is what relief you get on NHAI toll payment in term of taxes?
Uh, I think I'm not the right person. Only Mr. Minister can answer.
We can skip, sir. Next question, sir.
Yeah. So next question is most of the transport receipts are in cash. Further, most of the expenses are in cash.
Hmm.
Any qualifications required in tax audit report turnover 1 to 10 crore?
See, if the expenditure is crossing more than 5%, then the exemption will not be available, right? So tax credit gets applicable on 1 crore above only.
Yeah.
And if it talks about whether this company can deal in cash or not, so I'll tell you, in India we are still growing, right? And this logistics sector is like we deal with the customers who are in unorganized sector also, like in rural areas where we collect the cash. And in fact, still in the urban cities, like the metro cities like Delhi also, we still having the cash on delivery process, right? So unless until companies having the zero cash policy, so we cannot stop or ask client to discontinue with the cash operation. So cash can be done, but yes, we need to reconcile with the system, with the accounting system or the tracking system where they can establish that yes, this is the shipment which is required to be no, settled in cash. So I mean that cash should on particular day, that system should explain that yes, this cash should be available with the company or the vendor of that logistic company. And on the very next day they may have the process like usually I'll tell you in 20, usually logistic companies have 24 hours stat turnaround time. Like if today morning they received the cash or today they received the cash, so the next day they need to deposit in the nearby currency chest of that particular logistic company where they are involving the vendors also sometimes, and that needs to be credited to the bank account of the logistic company. The
Okay.
cash is still remains in our country.
Okay. And our last question is bill of sale for purchase of capital goods enough for remitting funds abroad to a foreign seller, like advance payment? Ship will be delivered later, say within 3 weeks.
No, no, no. Can you repeat again, Saurabh?
Yeah, sure. Is bill of sale for purchase of capital goods enough for remitting funds abroad to a foreign seller?
No, no, no. I'll not be able to comment on this because this is purely from compliance perspective. I mean,
Okay.
I mean, he's asking like for procurement of machinery. Can
Yeah.
I just share the bill of sale? I mean, it depends upon the requirement of that particular country, right? What is the
Yeah.
requirement? Because their local authority is also required to produce additional documents. And prior to bill of sale, I think KYC documents also needs to be submitted by the Indian subsidiary or the logistic company, along with the customer or logistic company, that yes, this is the company who is asking us to procure that machinery from that particular country. And that requirements vary from country to country. For example, Taiwan is having very strict, and at the same time Dubai is having little light. So that depends, and that depends upon the relationship of the India with the other country also, right?
Okay.
But only one single document may not be sufficient. I mean, this is a clear cut
Okay.
answer. Bill of sale will not only serve the purpose.
Okay. Thank you, sir. Thank you for such for your time for providing your insights. And I would like to call Anil, sir, for the vote of thanks.
Thank you, sir. Thank you so much, sir, for such a wonderful deliberation. You have covered all the aspects relating to the transportation sector and covered all the auditing aspects. And it was really a lengthy topic, and you have justified within a time frame of 1 hour and 50 minutes all the intricacies related to the audit of this sector. So once again, in spite of having the busy schedule in this season, and you have given your kind consent to deliberate for our members. Thank you so much on behalf of WSP of ICI for sparing your valuable time. Thank you so much, sir. Thank you so much for wonderful deliberation. I also thank
Thank you so much.
Saurabh. Thank you, sir. Thank you. I also thank
Thank you,
Saurabh
sir.
for wonderfully coordinating as well as moderating this webinar. Thank you so much, Saurabh. I also
Thank
thanks
you,
all
sir.
the participants of today's webinar. Thank you. Thank you so much. Good evening.
Thank you, Anji. Thank you,
Thank
Saurabh.
you, sir.
Thank,
Thank you,
Namaste.
everyone.
Namaste.
thank you,
Thank you.
everyone. Thank you. Bye.